It is a great pleasure to be here today to present the World Oil Outlook of OPEC. This morning we had a good session, this panel discussion about our view for the oil and energy outlook to 2050. For this presentation, I will go through different assumptions of this outlook and then energy demand growth and energy demand outlook, as well as the more details about oil. Just quick words on the oil outlook. The World Oil Outlook is a publication, an annual publication of OPEC. In short, it calls WO, and providing valuable insights, detailed outlook, and thorough analysis of the world's energy future. The publication is available in our website, and then it is also the physical, copies here. This is the outlook of OPEC in annual publication. Let's move now to some details of this outlook, starting by our key assumptions. As we see in this slide, that the first we have to note, to mention that we need to remind ourselves that this outlook was prepared in a time when uncertainties surrounding the global economic and political landscape which were quite significant. This is also related to evolving energy policies, where there is a noticeable trend of pushback and U-turn, intensifying scrutiny of major goals, primarily in the US and other developed or OECD countries. Naturally, the outlook also reflects significant demographic changes over the forecast period, as the global population will grow by 1.5 billion people, with non-OECD region accounting for almost all this population growth. This is very important because we will see the impact on the energy demand and oil demand in the upcoming slide. For India already the most populous country in the world, and it exceeded China in 2022. By 2050, we expect that India will add around 230 million people. Moreover, increasingly, urbanization will impact future energy demand. We expect that 1.9 billion people, or a little bit more, will live in cities by 2050. India urbanization rate is projected to grow and to reach 53%, moving from the current level of 37%, or 37%. On the economic side, the global GDP is expected or projected to more than double from now to 2050, with non-OECD countries again driving this growth. It is worth highlighting that India is expected to be the world's largest and fastest growing major economy, with an average annual growth of around 5.8% from 2024 to 2050. The size of India as an economy in the world GDP will represent 17% by 2050, as we see in this graph, moving from the current level of 8%. Now, when we move or taking account all the assumptions that I have already presented, we see that primary energy demand is expected to increase by 23% over the forecast period, with the non-OECD countries accounting for 72% of the global energy demand by 2050. Oil will retain the largest share in the energy mix throughout the forecast period, providing 30% of the global primary energy demand. The combined energy mix share of oil and gas is expected to stay above 50% between 2024 and 2050. Other renewables means here mostly wind and solar will have the largest and fastest growth and will reach 13.5% by 2050. up from the current low level, 3.5%, supported by different energy policies. The only energy source where we see decline is coal, which its share will decline by around 13 percentage points on the strong policies to decommission coal plants and limit coal usage. Regarding India, we see that India is said to be the single and largest contributor of global energy demand growth throughout the forecast period. We expect India energy demand will increase to 44 million barrels of oil equivalent, moving from the current level of around 22 million barrels of oil equivalent per day. This means energy demand growth on average will be at around 2.7% from now to 2050. Here it is important to highlight that one of the sectors will have a significant increase, which is the global electricity demand, which is expected to increase from around 32,000 terawatt hour in 2024 to almost 58,000 terawatt hour by 2050. The major drivers of the residential and the commercial sector, followed by industrial and transport, as well as the data centers and artificial intelligence. Strong demand growth on all regions. However, 75% growth is projected to come from developing and emerging economies. The OECD region will see also a significant growth. In terms of generation, as we see the right-hand side graph, that the strongest growth is expected to come from other renewables, means here from wind and solar, rising by 21,000 terawatt hour. Additionally, generation from gas also expected to grow, hydropower and nuclear. Due to the stringent policy and capacity phase-out, coal-fired generation is expected to decline by almost 3,000 terawatt hour. Consequently, the share of non-fossil fuels generation or sources for energy for electricity generation will increase from 42% to around 68% by 2050. Now let's move to the more focus on oil from different sectors, from different perspectives, and also with more focus on India. As we see in this table, at the global level, oil demand is projected to top around 113 million barrels a day by 2030. However, it will reach 123 million barrels by 2050. From our side, we don't see any peak demand in the, in that horizon, in the medium and long term. Demand growth will be primarily driven by non-OECD region, adding more than 28 million barrels a day. However, we see a decline of 8.5 million barrels a day in OECD region. The largest increment of this demand is expected to come from India and followed by other Asia and then the Middle East and Africa. More details about India will be discussed in the upcoming slides. Yeah, this slide is, we have more focus on India. We see that total oil demand is expected to increase by 8.2 million barrels a day over the outlook period, although an increase in overall oil demand is expected across more sectors. Road transportation is projected to witness the most significant growth with an increase of 4.6 million barrels a day. Several factors are behind this, the most significant being the exponential expansion of Indian passenger cars fleet, around 50 million in 2024 to more than 240 million in 2050. Furthermore, surrounded by economic growth, commercial vehicles are expected to increase fourfold by 2050. As a result, the most important source of incremental demand will be diesel, followed by gasoline. India petrochemical sector uses naphtha as a primary feedstock, and its demand set to increase from 0.4 million barrels a day in 2024 to around 1 million barrels a day in 2050. Compared to other regions, the Indian oil market features somewhere or somewhat high demand for other products, which is mainly bitumen, and petroleum coke, lubricants, and wax. Now, to meet this demand, we have to talk about supply. As we see in this graph, the development of the US supply and the required or the demand for DOC. Here, the word DOC is Declaration of Cooperation Countries, and this is what the media called it OPEC Plus. In the medium term, non-DOC or non-OPEC Plus liquid supply is projected to reach to raise from 53.3 million barrels a day in 2024 to 59 million barrels a day by 2030. This will cover almost 50% of the projected demand growth for this period. US liquids growth makes up 25% of the growth, followed by Brazil, Canada, Qatar, and Canada and other countries. Tight oil drivers the rising US supply, but we see a plateauing for this from the tight oil in the US. And beyond 2030, meaningful non-DOC or non-OPEC plus liquid supply growth only takes place in Canada, Brazil, and Argentina, largely offset by the decline in other mature producing regions. As a result, non-DOC or non-OPEC plus liquid supply plateaus at just under 60 million barrels a day from the 2030s, and continued demand growth, as we showed in the previous slide, means that DOC liquids or the demand from OPEC plus need to keep growing and raise by 1.5 million barrels a day, by 15 million barrels a day by 2050. As a result, the OPEC plus producers' share of global liquid supply increased from 48% in 2024 to 52% in 2050. Now, between the supply and demand, we have the downstream, which is mainly the refining sector as well as the trade, as we summarize in this slide. The left side is the capacity additions for the refining, and the right side is the crude and condensate export from Middle East by destination. In the long term, global refining additions are projected at 19.5 million barrels per day, including creep capacity expansions, with almost 85% of additional will be materializing before 2040. The majority of incremental refining capacity is expected to be added in the Asia Pacific, including India, and India will likely to be the most significant contributor to this growth, followed by several other large countries, including Indonesia. In China, capacity additions of around 3 million barrels a day are expected in the period to 2050. Africa projected refinery capacity additions is in the long term at around 3.2 million barrels a day, which mirrors domestic demand growth. Considering the trade in the second graph for the trade between Middle East and the different parts of the world, global inter-regional crude and condensate trade is expected to increase by over 10 million barrels a day to reach 47 million barrels a day by 2050. The Middle East is the major contributor to the global trade growth, with export volume increasing from 17 million barrels a day in 2024 to 28 million barrels a day in 2050. The Asia Pacific, including India, remains the most important destination with total imports increasing from 24 million barrels a day to 34 million barrels a day. Now it is important to talk about the investment. As we see in these two graphs, the cumulative oil-related investment for the oil sector in the period 2025 to 2050, and the other one is more detail or breakdown by region about the upstream investment requirement for the same period. In order to meet the steady rise demand that we have shown in the first slides, as well as replace barrels lost due to the natural decline, global cumulative investment of 18.2 trillion US dollar are required over the period 2025 to 2050. This is in 2025 US dollar. Almost 15 trillion US dollar or 547 or 74 billion per annum is needed in the upstream sector. The downstream, mid and midstream sector will require around 2 trillion and 1.3 trillion US dollar respectively. Any shortfall in meeting these needs risk market stability and energy security. Those are the messages reiterated by OPEC. What I have presented to you in previous slide, we call it our reference case, but we developed other scenarios. Two other scenarios. The first is the technology-driven scenario and the equitable growth scenario. For the technology-driven scenario, forces a more rapid pace pace of investment in advanced technologies than those assumed in the reference case. Besides higher energy efficiency, hence lower primary energy demand, other impacts include significant fuel substitutions and changing energy mix. As a result, global oil demand could reach 106 million barrels a day by 2050. However, we expect another scenario, which what we call the equitable growth scenario, focuses on improvement on energy access and further additional eradication of energy poverty, especially in developing countries, assuming a higher economic growth in the absence of coordinated move to reduce emissions. In other words, local development needs in this scenario are prioritized over the global issues. As a result, oil demand in this scenario tops 120 million barrels a day by 2035 and could reach 129 million barrels a day by 2050. Now, the key highlights from the presentation is that the recent policy shifts increase the range of uncertainties of global energy system. However, we have also inequitably between the global north and global south provides both challenges and opportunities for energy industry. We see in our outlook, or we don't see any sign of global oil demand peaking anytime soon, but we see that oil demand will continue to grow in the medium and long term. And also another message is that continued adequate investment are needed to meet future demand needs. The world needs realistic future energy pathways with a balanced approach to lowering emissions, while to ensuring energy security, energy access, and reliable and affordable energy. Finally, cooperation is crucial for sustainable and common energy future. Before I leave the stage, I would like to remind that we have all these publications free for download from our website, either in PDF, also all data related, and also we have it as an app, and you can download the publication. And with this, I will let you in a few minutes to watch few minute video summarizing the key finding. With this, I would like to thank you, and then I let you with the video. Thank you very much.